Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today we're going to talk about the monster crop that Statistics Canada reported, as well as some action in the futures market. So without further ado, let's get right into what happened today. We saw canola down $3.10 after some heavier losses yesterday. Wheat was down three and a quarter today to 573. Those two particular commodities are the largest grown in Western Canada, so they had us. I think there was some effect from the crop production report priced into that today. Kansas wheat was up 4.5 cents to 534. Chicago wheat was up 2 to 540 and a quarter. Soybeans were up 3 3/4 to 11.19 and a half. Corn was up 3 3/4 to 447 and a quarter. Soybean oil was up 1/10 of a cent at 51.79. Canadian dollar lost 1 point to close or to at the time of this snapshot, it was trading at 71.67. Live cattle up 210 to 224. Feeder cattle up 343 to 328.60. All right, here is the table that we send out to our customers immediately following the report. A couple of things to note here. Much of the report was over and above what analysts were expecting. So as you can see here, all wheat was reported 1.4 or 1.465 million tons above analyst expectations. Wheat excluding durum was a little bit more than that. So spring wheat actually was a big part of that. Durum actually came in a little bit under, but still much larger than last year. Canola was 550,000 tons above analyst expectations. Barley 825,000 tons, which is big for a under $10 million ton crop. Oats was 260,000 above. Field peas were a little bit below, and lentils were 103,000 tons above, which again is a big number with given the small amount of production that's usually supported there. Oh, I just wanted to also kind of give some context around the percentage here. So for wheat, that's 11% higher. Again, most of that is from spring wheat and particularly in Western Canada. Canola was up 13% from last year. Oats up 16%. Barley up 19.5%. You can probably see the pattern here going higher as we go up. Peas 31% over last year, and lentils 38% above last year. So this crop was a monster. I think for the most part, the market had kind of already knew that. There was lots of grain getting pushed into the system at harvest, and lots of supply available there. We saw prices decline ahead of that time and during that time. So again, not much of a surprise. Some of the numbers obviously were a surprise, but having said that, we're going to go into a more in-depth look at the Statistics Canada data. We're going to do that in our Friday weekly report that is available to our premium subscribers. If you want to be a premium subscriber and you want to get our assessment on Canada's S&Ds, you can subscribe at CanadianAgMarkets.com/subscribe. We'll put that link in the comments below. So if you want to see more than what we're going to show you here, because we're just going to go over high level here, then subscribe, because we'd love to have you on board. All right, here's the ex-durum production here over the last 10 years. As you can see, this is significantly higher than any other year so far. 32.8 million tons is the wheat excluding durum. That does include winter wheat and soft wheats and things like that. But overall, that was done on a 60.8 bushel per acre yield, just a monster. I had heard even some yields in Western Canada going over 100, and that's not off the yield monitor on one field. There was an article, I should have pulled it. There was an article where they interviewed a farmer that got 100 bushels per acre, and that was over the scale on his farmyard. So big wheat crop. Just kind of boiling it down to spring wheat, that crop was 29.3 million tons in Western Canada. Again, record large at this point with a yield of 58.8. So, we're just blowing the doors off of previous highs. And, in one way, this is positive. This is great. We love to fill the bins. We love to see those yield monitors in the combine. So, it feels good to harvest a crop this big. Here's the canola production in Canada. It is the highest, but not by as much of a margin. 2017 saw 21.5 million ton crop, 21.8 this year. The crush program is significantly stronger this year, although, as we've been talking over the last few months, the export program is significantly behind. Canola's yield was pegged at 44.7, again, significantly above any of the previous highs at this point. And barley, 9.7 million tons. That isn't a record. It's still significantly larger than last year and significantly larger than expectations. But it's not the largest crop on the books, although we are seeing competition from the likes of corn being imported into the US and everything that is displacing some barley. So that's a concern in that market. This yield this year was 79.4 in barley. Again, just a massive barley crop. Field peas were up to 3.9. Just for context here, we have seen, over 4.5 million ton crops before. So this isn't huge, but the yield was good, 42.3. So good yields in peas. We did see prices decline as we moved towards harvest and as we moved into harvest. It also got priced in a little bit ahead of time. Here's the durum production, just some other quick one, 7.1 million tons. I don't think that's a record either, but still was a significantly bigger crop than last year. That was done on a 40.9 bushel per acre yield. Again, that was just under, or quite a bit under, actually, the 2020 yield that we saw a few years back there. Now let's get into what that did to the futures markets. Canola had actually dipped significantly yesterday. Part of that was likely due to the expectations release and some pricing of the markets into there. A little bit of weakness today, although it was down, $8 or $9 at one point and did come back to close, a little bit higher. Still a pretty big loss on the day. We have support here now on the January down at 610. We finished off the day at about 625, so there's probably $15 left before we see support there if the market wants to take it there. But as I was saying, only some of that, I think, was the expectations of a big crop being priced in, because we did see losses in the rest of the vegetable oil complex and the oilseed complex as well. Here's January soybean oil. As you can see, it had been rallying, but took a big breather yesterday. Made some of that back today. Soybeans proper also took a dip yesterday, testing some recent support down near 1110. We think that this loss in soybeans was a result of the comments that U.S. Treasury Secretary Scott Bessent said that China was on track to meet the tonnage obligations, but he seemed or appeared to walk back that timeline. So, the hopes of 12 million tons getting bought by the end of December is fading, and that's being priced into the market. I think that also had something to do with canola's downward trend yesterday. We are seeing weakness in Euronext rapeseed, though. We saw the losses yesterday, but we actually saw larger losses in rapeseed today. It's breaking down below some moving averages now, so there might be a little bit of a canary in the coal mine there. Originally, this might have. Obviously, the Euronext closed before the Canadian market did, so it may have kind of closed when canola was down at its lows of the day. So, there's hope that Euronext rapeseed will bounce back, but we do think that Euronext rapeseed was following canola and not necessarily the other way around. Here's March Minneapolis wheat. It did test some support today, but as you can see, it has just been very flat. It continues to be very flat since the end of October. But Minneapolis wheat did underperform the other parts of the wheat complex today. As you can see, we were down about half a percentage point on the March. Whereas if you look to the hard red winter, it was up almost 0.8 of a percentage point, and March Chicago wheat was up about 0.4 of a cent. So Minneapolis wheat was lower. The rest of the wheat complex was higher. Obviously, that had the Canadian numbers had something to do with that, and just its underperformance overall. We have been seeing Kansas wheat climb a little bit. It's testing that 20-day moving average now. Nice little rally here, although there is kind of some channel resistance right up at these levels. So we might see a failure here in the KC market. But if we do see a push above some of those resistance levels, that would be a positive sign. Chicago's still a little bit flat, at least since the middle of November. So nothing really much to talk about there. All right, like I said, we will have a full report out on Friday for our premium subscribers. But if you don't want to be a premium subscriber, just subscribe to this YouTube channel. We'd be happy to have you here, and we'll see you again tomorrow.